Hey, it's Jaime with Echo Real Estate Advisors. Welcome back to my channel. If you're a home buyer, a home seller, an investor, or simply want to learn more about real estate, this is the home for you. So don't forget to subscribe. Today, we are going on a home buying journey. So in other videos, I make the disclaimer of, hey, this is going to be a short video, so just stay tuned and stay to the end. But although I still want you to stay to the end, know that this is not a short video. This is a comprehensive look at the home buying journey. So if you're curious, how does home buying work? What are the steps? What is the appraisal? What's the inspection? What's an option? All that will be covered here in this video, so I can guarantee you that one, it's not going to be short, but two, it is going to be one of the most comprehensive videos that you're going to watch on home buying. So let's check this out. All right, this home buying map, this home buying journey map is in the description below. So please download it. We're going to go through a good amount of information. This is a great visual to have as you're making the home buying decision or you're going through the home buying journey, so you don't miss any steps along the way that will be crucial when you're purchasing your home. All right, so let's zoom in. All right, so the home buying journey from contract to close. So it's even before contract, so just know that. The first step is the initial real estate consultation. So this is a consultation that you're going to have with your realtor, your real estate professionals, whether you're working with me or whether you're working with another realtor in the area. This is very important for you, as that real estate professional will be able to shortcut the learning curve and is going to cover a good, or at least should cover a good amount of the information that you're going to see today. But we're going to look at your real estate needs. We're going to look at the type of home that you're looking for. We're going to probe a little bit into finances, not too much, but there will be an element of that just to give you a realistic expectation of what to expect when purchasing the home, and if what you're hoping to achieve or you're wanting to achieve is possible in the area that you're looking to achieve that in. I hope that makes sense. So the initial real estate consultation, again, is going to give you a good blueprint of what to expect when buying and give you a good amount of resources to work from to make the home buying journey a success. After you have that, you're going to be invited to go over to a lender. So apply for a loan. There are really three ways to purchase a home: either all cash. So if you have the money in the bank, you can go to the bank, get all that money and purchase a property. Or you're going to do owner financing. So the owner of the property will be, you just pay the homeowner a down payment and then make payments to her or him for that property. So that is owner financing. So that owner becomes the bank in a way, as they are facilitating the purchase of the home to where you don't have to pay the full amount. Now, the third way, which is the most common way to purchase a property, is getting a loan. And that's why most of the time you're going to be sent over to a lender or asked to speak with a lender and get a pre-approval. So that lender, that bank, their responsibility is giving you the rest of the money to purchase that home. So going back to those three ways of purchasing, you can purchase it all cash. You can have owner financing if the owner is willing and able to. And then the third way is getting that loan, which again is the most common way to purchase a home. So you would go over to the lender and get a pre-approval letter. Now, this pre-approval is just that, it's prior to the actual approval. Very commonly referred to as a pre-qualification letter. So a pre-qual letter or pre-approval letter, that is what we're looking for as realtors for you to have, so we have some financial backing, something on paper from an institution, from a lender saying, hey, this buyer, based off of everything that we have the information that we have from this buyer, they're eligible for a loan. So know that when this buyer is offering $250,000 for this home, some of it's going to come from the buyer, but the rest of it is going to come from the lender. So that is what we're looking for. We're looking for that pre-qualification letter. Now, how do you get that pre-approval letter? That letter is written by the lender based off of the information that you gave them. You let them know how much you earn. You let them know, and they will have run your credit, but you will let them know about your credit. They're going to look at your tax returns and things of that nature. So they're going to look at you as the financial aspect of you to really qualify if you would be eligible for a loan, if there's a likelihood that you're actually going to be approved for the loan. If there's things that don't qualify you for a loan, if there's some things that don't qualify you for a loan, then you won't be getting that pre-qualification letter or that pre-approval letter. But assuming we have that pre-approval letter, then we're looking for properties. That's that fun stage of looking on properties, whether you're looking on Zillow or you're looking directly on the MLS or you're looking on Realtor.com, wherever you're looking on for these properties online. This is a fun part. You get to see which styles of homes you like, what areas you're looking for, and it's the fun part. And we're out there looking for properties. After you select a few that you are interested in, we're going to go and look at the properties physically and just tour them, look at some pitfalls, look at some highlights, look at some really what we want in the property, and ultimately we're going to find a property that we want to purchase. Once we find that property, then we're going to make an offer. We're going to make an offer to purchase that property. Now, dependent on a lot of factors, the competition for that particular the real estate market, the amount of time it's been on the market, just so many different factors, we're going to have negotiation, or we may not have as much leverage in the negotiation, but we will be looking at negotiating back and forth. You may offer a certain amount, then the seller would be countering that offer, and ultimately what we're looking for is a mutual agreement in which we get the offer accepted. Now, once you get into contract, another way of saying offer is accepted, then we're looking at actually purchasing the property. Now, a question that you may already have is, how long is this going to take? You spent a lot of time in these steps up here, and we just got into contract. Realistically, it can take several days to several months, dependent on several factors. How long it takes for you to get that pre-approval letter. If you're on task and really getting after it and providing everything that the lender requires you to have in order to issue a pre-approval letter, it can be done in 24 hours, 48 hours. It can be done really, really quickly. Now, the other component of that, another piece to the equation is, how often are you looking for properties? How many properties are out there that within your criteria that you are even interested in? What's the competition out there like? Is it going to take? Are you in multiple offer situations? Are you in a very competitive market? What does that look like? You can safely say, 7 days is not unrealistic to go from here to offer accepted, but we're making a lot of assumptions. We're making the assumptions that your loan pre-approval was done very quickly, so you're very proactive in that. We're making the assumptions that we went out and looked for properties a good amount of days, or we just found that perfect property in that first day, and it didn't take us too long to negotiate. So 7 days is not unrealistic, but it's not also the norm. Again, every situation is different, but if we're looking for days and expectation, it's not unrealistic to say that you would be in contract within 7 days, 14 days, 30 days. This is dependent on the market and dependent on your availability as well. All right, we are headway. Once we have the property under contract, so once our offer is accepted, we're going to break it down into 3 different columns. We're going to look at what an agent coordinates, which an agent coordinates. The agent's going to coordinate a good amount of the transaction. They are the quarterback of the transaction, and they need to be guiding you through this entire process. Now, they can't do the work for you, but they can certainly make this so much easier by giving you information up front, knowing what to expect, doing a lot of just education, a lot of sharing of knowledge, very similar to this video, that'll make your life a lot easier because you'll know what to expect. If you're being surprised at the nth hour of, hey, you need to have this, why haven't you written this check, why haven't you done that, then it can get very frustrating, especially given that your life continues. You have the family commitments, you have work commitments, you have personal commitments, and on top of that, you have making one of the most sizable investments in your life along with it. So know that a realtor can really make your life a lot easier when you're purchasing that property. That's why highlighting and making the decision of who to work with is very important. So we're going to cover this first, but we'll just go through the rest of the columns. At this point, we're going to reintroduce the lender. Remember, the lender was up here already, getting us that pre-approval letter. They're very important if we're financing because they say no, then we can't go. If they say no, we can't purchase, as we need that rest of the money in order to purchase the property. And then we're going to introduce the title company. We're going to come back to them here in a bit, but the title company, for all intents and purposes, is looking at the property that we have selected and put an offer in, and they're going to make sure that it has a clean title, making sure that that property, the title of that property, so when you purchase it, you won't have any liens. You're not going to have an issue with somebody saying, hey, that property should have never been sold, it's actually mine. They're going to issue you a title policy, which effectively is a title insurance, making sure that the property that you purchased is in fact eligible to be purchased, and you're not going to have any issues down the road, 2 years down the road, 5 years down the road, 10 years down the road, with somebody coming out of the woodwork saying, hey, that property is actually mine. Then that would be an issue, of course. All right, let's go over here real quick. So the buyer's agent coordinates it. As soon as we get into contract, we are on the phone looking for a property inspector. Now, the agent has a short list of people that they've worked with in the past, so this is where tapping into the agent's resources is very important. The property inspection is something that is done by a third party. Generally, you don't want to do the property inspection yourself. You want a professional property inspection be conducted on that property. Now, this inspection is more for you as a buyer. This inspection is not going to go to the lender. This inspection is not going to go to the title company. This inspection is for you as a buyer. You want a third party, you want a professional third party that has experience in this, looking at the property in the electrical, the plumbing, the roof, the foundation. You want as much information on the big investment that you're about to make. Based off of that is when we get into deficiencies negotiated. So keep in mind, when you're looking for properties up here, when we're viewing properties, yes, I and other realtors will be pointing out some defects that we may need to be cautious of. But we're not turning on all the faucets. We're not turning on all the switches. We're not looking at the electrical panel. We're not walking the roof. We're not doing any of that. We're looking at the property, checking out the neighborhood, checking out the layout, looking and seeing if this property is the one that we want to purchase. We are really not qualifying it from a, hey, is this property up to par? Is there some big issues that I'm missing? Is there something that is materially wrong with this property. So this property inspection is going to spit back a 26-page report and then some of everything. It's going to look at the mechanical, the structural, termite inspections, just the environment, just a lot of information that is specific to that property. Now, this is also a good time to mention that this inspection, this goes to a third party, and that's why you hear me reference third party so much. This third party is going to collect for those efforts. And an inspection, depending on where you are, a lot of markets are different, the size of the home, and things of that nature. A property inspection is going to run you anywhere from $300, $600, depending on the size of the property. And if we're talking about land, it's going to be a different cost. So just know that that inspection, it's going to vary, but for all intents and purposes, expect to spend at least $300 for the inspection. Now, based off of those deficiencies, then we get to that second negotiation. Up here, we offered, we made our offer. We had some concessions, we had counters and everything of that nature. We got our offer accepted. So it's technically our first offer or our first negotiation. Negotiation happens here when we get some additional intel on the property that we weren't privy to when we walked that property prior. Once we have some understanding of what we want to ask for, what repairs we want made, or if we want to take the strategy of, hey, don't bother with the repairs, let's just have you seller, credit us a certain amount and we'll take care of the repairs. That is totally okay. There's different strategies, different ways to approach it. It just depends on the type of seller that you're working with or just the situation as well. So again, this is very pivotal to know and have an agent that is going to work with you and has understanding of all of this process and is able to negotiate that second negotiation to benefit you. Because as a buyer, you've already committed to a certain amount. Once the inspection comes back, there's a good opportunity that you're actually spending less. So from a seller's side, they've already shared what they're willing to sell the property for, but from the seller's side, they know that, well, chances are I'm not going to get that amount that we've already discussed because of that inspection. And then you're going to be working on securing the homeowner's insurance. So if you're getting a loan, you will be looking for a home insurance provider. This home insurance provider, most commonly, whoever you're using for your auto is who you're most likely going to use for your home insurance. But shop as much as you can. Shop it around because policies, the premiums, the cost of home insurance just varies tremendously. So home insurance is very important and it's a requirement per the lender. Going back up here, and this lender here, they do require that you purchase a home insurance in case of an accident, in case of something going wrong. You want to be protected, not only for the lender standpoint, but for you as well. So just know that. And I'm going to add a small asterisk here. I don't include it in this layout because it's not always the case, but oftentimes you have home warranties. Now, home warranties are designed to cover your major appliances, and dependent on which real estate market you're in, again, I'm in the DFW area, I'm here in Texas, so in our forms, in our contracts, there is a section for us to include and negotiate a home warranty. A residential service contract is what they're called, where you're asking the seller to give you, a buyer, a credit to purchase this home warranty. It's different from insurances. I have another video in this channel that goes into the differences between a home warranty and a home insurance, so I invite you to check that out. But for all intents and purposes, know that a home warranty can cover your major appliances and generally lasts 1 year, and, sorry for all the ands, but and it's cheaper whenever you're purchasing a property versus if you're already a homeowner and you want a home warranty, calling somebody up and saying, hey, I want that home warranty, it's going to cost you more at that time. You can still get it, but just know that they're cheaper or less expensive when you actually purchase the property. That's a quick aside. I know it's a small asterisk, but I wanted to introduce that as well to be as thorough as possible. Okay, let's come back up here to the title company and lender to wrap up two important items. The property inspection. We already discussed that it's going to cost us some money to get this property inspected, and we've already discussed that it changes or it varies. It could be $300, $600, $700, depending on the size of the property. So we know that cost. Now, during this option period, from here to here, most likely, dependent on the market that you're in and depending on the agent, depending on the real estate market in general, you're going to be asking for an option period. Now, this option period, again, a lot of variables, but for all intents and purposes, can last anywhere from a day to 10 days to 20 days, 30 days, but most common, you're looking at anywhere from 5 to 10 days for an option period. And what this option period is a period in which you as a buyer can decide to back out of the contract, no questions asked. You can give as many reasons as to why you're backing out of the contract or just getting out of the contract altogether, or you can provide no reasons. You can provide as many reasons as possible or no reasons at all during your option period. Now that has a cost. Think of it as a deposit. That option period will cost you an option fee. And again, for all intents and purposes, everything is negotiable and everything is dependent on markets, but generally an option fee is gonna be anywhere from $100 to $250. In the comment section, I'm sure I'm gonna get some comments on, no, it's actually $50 or whatever. Generally, I'm speaking in generalities to really benefit as many people as possible in that aspect. So for us to have that option to do the property inspection and get those 7 days, as in this example, to really get a bit more intel on the property, we're paying $100 for those 7 days. Those $100 immediately will be going to the home owner. So once you get that offer accepted, those $100 need to make their way 3 days to the homeowner. No exceptions. So if you don't do that, then you've broken the contract. So just know that you don't want to void a contract because there are some legal ramifications to that. So that is one check. Now, again, I mentioned think of it as a deposit, because if you take this property all the way to actually purchasing, if you take this transaction all the way to actually purchasing, then that gets applied to your closing, i.e., it gets applied, it's money that you've invested in the property. You don't have to pay that $100 again. Now, if you decide to opt out of the contract, then you're not getting those $100 back. Period, point blank, you're done, right? So you're buying that option. Now, recap, property inspection, expect to spend at least $300, and that's money that you won't get back. That's a third party, that's somebody that did a professional service for that property. That money is gone, or invested in a different way, but you won't see that money again. It won't be at closing waiting for you. The $100, if you take this transaction all the way to close, it will be waiting for you as a credit at closing. Second, although not required, and this is a misconception, although not required earnest money, another way for saying deposit, is expected. Not a requirement, not legally required. I can't stress this enough because there's a lot of misconception about that. That earnest money is good faith money, is a deposit, is something that makes your offer a bit more enticing when you're making that offer and proving and committing and being that good faith offer to the seller that, hey, we want to purchase this property. This is how we're going to finance ourselves. And we are just so ready to purchase this property that we're willing to put 1% down or 1% earnest money on the line. Not legally required. You don't have to do it, but it's expected that you're looking at 1% of the purchase price that you're going to offer in earnest money, i.e. deposit, another deposit thing, where once you take this property all the way to close, you're going to have that waiting for you as a credit. You're going to have that waiting. It gets applied to the purchase of the property. Now, this too, along with the option money, 3 days to deliver that money. Now, and I've had this happen before, not to me, but I've seen it, where the buyer makes that check out to the seller, the owner of the property. Don't do that. That money goes to the title company. We're going to cover here in a few minutes. But the reason for that is the title company is going to open up escrow. They're going to keep a place in reserve, a place that neither the seller can touch, neither you can touch. That is something that the title company is going to receive. So when you're cutting those two checks, that option money going to be made to the owner. The earnest money is going to be made out to the title company. Now, the title company is the one that's reserving that, opening up escrow and keeping it there. Now, one question that you're probably thinking at this point is, okay, Jaime, so you're saying that I'm going to go out and get my inspector. It's going to cost roughly $300. I'm going to go and for this option period that happens over here, for those 7 days, I have to pay $100. And if I end up purchasing this property, it's going to be credited most of the time. I say most of the time, but you're going to see in the contract that you have the option to not credit it, but I don't want to dilute things. For all intents and purposes, it will be applied at closing. Then so you're telling me that, Jaime, but then on the earnest side, when I give that to the title company, yes, I understand that it's going to be applied to the cost of the home and at closing, but what happens if I don't close? What happens with that money? Well, during that option period, if you opt out, if you say, hey, this property really needs a lot more work than I saw, or I had a change of heart, or whatever your reason is to backing out of the contract, that earnest money gets given back to you, gets refunded back to you. No issue, no questions asked. That's why we encourage to have the property inspection done as quickly as possible to give you enough time to negotiate everything else like this, where the earnest money is so easily given back to you, credited back to you if you don't purchase the property, versus once that option period elapses, post that, we're gonna need to find a different way to get out of that contract to have our earnest money come back to us as a buyer. It's not guaranteed that you're going to have that come back to you as a buyer, because if you breach the contract, not meaning hey, I'm just going to opt out of the contract during my option period. If you break the contract, if you breach the contract, then that earnest money is there for a reason. It is that intentionality, that good faith effort, that deposit. That becomes the owners. That becomes the sellers. So you lose the earnest money is what I'm getting at. As long as you get a contract in a legitimate way, it comes back to you, regardless, whether you purchased it or didn't. But if you break the contract, then that good faith money, that earnest money, that deposit, it's gone. So 1% of $250,000, that's $2,500 that you don't see. So going back, you're gonna hear me say this a lot. Working with a realtor that is knowledgeable is highly encouraged. I understand there's a lot of real estate license out there, but the average agent isn't doing more than 3 transactions a year. So you want to be careful. You want to make sure that this person is knowledgeable. You want to make sure that this person is current. You want to make sure that, yes, they have great negotiation skills, but also they are diligent and are protecting you and guiding you through all of this, because there's money on the line and the agent's not going to lose anything. They get paid if you end up purchasing the property, they're going to get paid. If they don't, time invested. And marketing costs, things of that nature. I'm not going to dilute it. I understand my profession as well. So it's to everyone's interest that the property goes through to completion, actually gets purchased. But at the end of the day, the agent, they're not out that money. It's you. So just wanted to give you that that heads up. All right, we spent a lot of time here. I think it was very good, well time spent. It was good time spent, but we need to get to that home is yours, congratulations part. All right, the lender coordinates. So once we make that offer and we're doing all of this work, buyer agents is coordinating that. You've given the option money to the owner. You've given the earnest money over to the title company. The lender's going to be working very, very carefully with you and very closely with you these next couple of days, because they want to get that loan application made, that formal loan application. Up here, most likely you just did it via an app and provided some information backing up, substantiating what you said you earned, what you said your credit was, and everything else of that nature. However, here, this is where you're proving it. They're going to order the final credit report. They're going to do a hard pull. Most likely they will have done that already up here, but you're not going to get around getting that hard pull on your credit. They're going to order the appraisal. So the appraisal, a lot of people get this confused with the property inspection. The appraisal is a formal request from the lender to another entity saying, hey, Mr. or Mrs. Appraiser, please go out to this property that one of my potential buyers is wanting to purchase. And from this appraisal, what the lender is getting is peace of mind that you as a buyer, if you're offering $250,000 to purchase a home, they want that property to be worth $250,000. So they're making sure that the value of the home is the same, if not more, of what you offered. Because if you offer $250,000 on a property that's worth $150,000, you're going to have an issue. There's that delta, there's that gap between what it's actually worth and what you offered. So that difference has to be made up somehow. That difference is something that you have to make up one way or another. The verification of income and assets. Although you did provide your tax returns, although you did provide where you worked and everything of that nature, they do need to verify that. So they're going to pull the tax transcripts from the government, from the IRS. They're going to reach out to your place of work, your employer, and verify that everything that you provided is on the up and up. So they are doing their due diligence. During these steps, it is very vital that you provide and are very responsive to what they're requesting, because from the date of acceptance to the date that we're closing, generally we're looking at 21 days to 30 days. Again, I keep saying this, the disclaimer, real estate markets are different. The environment could have changed by the time you're watching this video. The real estate market could have been up, down, whatever. So generally, we're talking about closing in 21 days to 30 days from the date that we entered into contract. So let's add up the days. Let's say we were super responsive and we were super active in our search and we got all this done, found the property and put it under contract in 7 days. And then we add another 21 days. You're looking at 28 days. It's not unrealistic to be from the point of just meeting with the realtor to the point of being in your home to be done within 30 days. It's happened to be multiple times. I don't want to set that false expectation though, although it is reasonable or it is possible, it's not as common. So a lot of the questions are, well, how long will it take me to purchase a home? I tell people 60 days. Just being realistic with you. This part, we can program this. We have a good expectation of how long this is going to take, but I don't know your work schedule. I don't know how diligent you're going to be with getting that loan approval. I don't know if you've done your taxes. You may need to do your taxes, and then we're going to have a conversation. Okay, the title company. Now, at the same time, the title company, once this contract hits their inbox, which again, the buyer's agent, the agent's supposed to be overseeing all this, they will make that available to the title company along with the lender, where they're quarterbacking the entire transaction. They're going to look and get the title commitment order. So a title commitment is a promise or a pinky promise that they're going to be able to issue the title policy. Title policy, think of it as a title insurance. So think of it as insurance that we referenced it minutes ago, where the property that you're purchasing, they are ensuring that no one's going to come after you and take that property away from you. And if somebody does, they are giving you that policy, that insurance, that they will take care of it. So if they missed a lien where somebody performed some yard work on that particular property and the owner at the time didn't pay them for whatever reason, they could get the vendor, the person that did the work, can actually get a lien on that property. It's called a mechanic's lien. They did a service on that property, and now they're going to put a mechanic's lien on that property until they get paid. So the next time that that property sells, i.e. when you're trying to purchase that property, it's going to come up, or it should come up. And if it doesn't come up and the vendor finds out and they're hot and mad and they want their money, that is the title policies. That's what the title policy is there for. Now, that's a simple example, which is the most common example, and it happens quite frequently. I shouldn't say quite frequently. Of the times that it happens, that would be a very common thing that gets addressed. Most of the time, the title company, the title policy, the title company will find that. So they're going to reach out to the seller. Hey, we found this lien. We need you to take care of it. That's how it gets done. Now, the title commitment is going to be issued to you within the next several days of the offer being accepted. In most contracts, again, I'm speaking of Texas, it will be done within the next 20 days from date of acceptance in most cases. Then they're going to do a more thorough title search. They're going to search through these liens. They're going to search through this property. They're going to see the chain of custody, so how the property transfers from this owner to the next owner to the next owner to the next owner. If they can't find when the owner sold it to this owner, if there's a gap, there's a cloud on title. So they're going to need to deal with that. Now I'm being so particular here, and I'm trying to keep my commitment up. This is the most comprehensive video that you will have watched on purchasing a property, but there's just so many different things that can happen within the title search. So my advice here is finding a title company that is reputable, because not all title companies are the same. And this goes back to the buyers, your agent, your realtor, having that knowledge and having people that they have worked with before, tapping into their resources, because yes, you have this is something you negotiate up front in the contract on what title company is going to be used. You may not know what a title company is, you may not know where a title company is, or you may not know anything about a title company, but a realtor does. So make sure that you tap in that person's resources because they are very important. If there's an issue on title, then that property is not closing. And if you cannot get a title, if you cannot get that title policy, you as a buyer, then you are opening yourself to some liability. You can still purchase a property, no doubt. However, you're exposing yourself to a certain amount of liability that's not needed if a different title company could have performed the title work. So if you have any questions about title companies, just feel free to reach out to me. My information is in the description below. If you have any questions about lenders, if you have any questions about really anything, my information is in the description below. The last thing I'll say about title is probate situations. Probate situations are very important and take a little bit longer. So make sure that you're working with an agent that is familiar with probate. So probate happens when the property owner dies, then that title, then the ownership, how is that going to be transferred, and getting that ownership to that heir, or if they didn't have a will, making sure that whoever's going to become the property owner can legitimately become the owner. So the probate is really just transferring the ownership from the property owner that died to the next person, or the person that was or it is supposed to be the owner. So make sure that you're working with somebody that knows how to handle that, because there's a lot more steps that need to be done and a lot of work that the title company will need to do after or during probate. So there is that. Okay, we're resetting. We're getting close to the finish or to the end. We will be coordinating from what you're doing over here and what the agent's really directly guiding you through. And we're going to be getting everything from the lender. We're going to get everything from the title company. Now, again, this process can take anywhere from 21 days to 30 days for you to get to close. All that information is going to come back. The appraisal gets received and it says, hey, this property that this buyer is trying to purchase is actually worth what they're offering, so you're good to go. The loan is good. The loan package gets assembled, so everything comes together. It's submitted to an underwriter or loan committee. So once you have all that information, once title work comes in, once the appraisal comes in, once the verification, everything comes in, the amendments over here come in, that entire package gets submitted to an underwriter. So that underwriter is, from a loan perspective, somebody that measures the risk. What is the likelihood that this property is actually owned by the present seller? What is the likelihood that this buyer is going to be able to make that commitment or make the payments? Essentially, they're measuring risk. And this underwriter will give a yes or no verdict. And most common what happens, the loan package gets assembled, it gets presented to the underwriter. The underwriter is going to say, I need a little bit more on the title side, or I need you to explain what happened here between gaps of employment. I need you to explain how you came into $10,000 within the last 5 days, or essentially what I'm getting at is, most common situations like that is they're going to request a gift letter. So they want to account for as much as they can account for. So those are just some examples. Of course, there's a lot more, but we want to get to the end of the video at some point. And then congratulations, the loan is approved. Fantastic. There's a lot of work that goes into it from a lot of parties that have to come together and get this accomplished in a really, it's 21 days isn't that bad. So you get the loan approval. All loan documents go over to the title company. Note, once you get the loan approved, you will be issued a closing disclosure. You as a buyer, you are going to get a closing disclosure from your lender. And they have to give you that closing disclosure, formerly known as a HUD-1. They have to give you that closing disclosure 3 days prior to closing. So if you're closing 21 days from the date of contract, then all that work doesn't mean, all the work that you're seeing right now doesn't mean that, hey, on day 21, everything is good. No, 3 days prior to the 21 days that you put on that contract, you need to have everything ready to go. So if you've been delaying getting your home insurance over here, if you've been delaying getting your documentation over to the lender, or if you've been delaying reaching out to a title company to provide all the information that they're requesting, or getting your home warranty over to them so they can purchase it for you, then you're in trouble here, because they have to give you that they have to give you that closing disclosure 3 days prior to closing. And for this example, we're saying that attending the closing is the day of closing. So know that that's what's going to happen. All documents sent to the title company, they're going to make sure that everything is balanced. They're going to reach out to their underwriters, and everything is going to happen. At that point, you're going to do another asterisk. Although not required, is strongly encouraged for you to do a walkthrough of the property prior to go into closing. The day prior, or days prior, or just prior to closing. And the reason for that, you as a buyer, keep in mind, you saw the property up here, right? You saw a property that you loved. We made an offer on it, and we got it accepted. You most likely went to the property inspection, but from the day that you saw it up here to when you had the property inspection, you're looking at about 2-3 days, depending on how quickly you can get an inspector out there. That was 21 days from the day that you were closing. And if there was a proper, if you agreed to some repairs, if you agreed to something happening, or some repairs happening on that property, then you want to make sure that it happened. And you also want to check on the condition of the property after somebody has moved. So if somebody lived in that property, then you're going to make sure, or want to ensure, that from the day that you saw it, from the day that you saw it up here, and the day that you most likely came back for the inspection, you want to make sure that it's, if not the same, better than when you saw it. So I'm going to put an asterisk here. I may consider actually adding that to the process, as I encourage all of my clients to do that. Not required, but I really encourage, not only my clients, I encourage everybody, go do a walkthrough of the property before closing. Because after you closing, what leverage are you going to hold over the seller? Right now, the seller is expecting that money, and rightly so, right? I mean, I'm not suggesting, hey, hold this over their head, but motivation changes when their bank account is full and you've shelled out a lot of money. So anyway, I'll keep going. All right, you're going to attend closing. Once the seller signs everything, once you sign everything, the mortgage fund. So they're going to send all the paperwork over to your lender. Again, your lender's going to send everything to the underwriter, going back up here, measuring the risk, making sure that everything is signed for. All the documents that needed signing were signed. Then the mortgage funds. When the mortgage funds, well, let's take it all the way through. The new deed and mortgage are recorded. This is not something that you do. This is something that the title company will do, and the seller gets paid. But the mortgage, once it funds, once your loan funds, you are handed the keys, and then the seller's going to get paid. The home is yours at that point. So, congratulations. Okay, and this is where I get to my public service announcement. Working with a qualified realtor makes all the difference in the world. It will make this entire journey so much more pleasant, so much better. because you're going to be proactive. You're going to know what to expect. You're going to be coached through the entire process, and you're going to be guided through this home buying journey, which if you're trying to piece it together by yourself, it can get overwhelming. So that is my last, public service announcement, at least for this video. If you have any questions, please feel free to reach out. Well, that's it, folks. Thanks for watching. Make yourself at home by checking out some of my other videos, and don't forget to like, comment, share, and subscribe for more valuable real estate content. If there is any way I can help you now or in the future, you know where to find me.